tell us a little bit about market analysis and maybe a good story in that area?
Sure. Well, we talk about this, and we sometimes I think we're just beating a dead horse. We talk about this so much, but the reason it's so important is what is the hardest part of investing? It is what the general market is doing, and Randall Morrow nailed it. He was using market analysis. He's a professional investor, and he follows the market. He uses MarketSmith, he uses IBD to help him with his market analysis. Now, what was happening? Okay, we're getting pretty chopped up. You see where we're falling down there? We've got July. We're dropping. Here's just an ugly drop.
This is why we never tune out, okay? Never. No matter how bad we feel or bored or whatever. Go ahead. This is beautiful. Don't.
And I know Matt and I were covering this on the radio show, and we got really tired of covering this period of time. You remember this, Scott?
Yeah.
We were getting slopped around. Your positions weren't working. We had a couple of failed follow-through days. This is where the investing gets difficult, but this is where Randall Morrow started paying attention to the markets. We've got choppy, choppy, choppy. What happens in December? From July through November, it's ugly.
All of a sudden, you blink and the nature of the market changes, and sometimes it can change within a couple of weeks, and that's why we never fully tune out. Go ahead.
And so, look at this. Look at how much tighter all of a sudden. You want to point there, Rich, to where it gets tighter, right? It just starts getting much, much tighter. Now, we haven't had the follow-through day yet, but look how the personality of the market changed. This is where you begin to say, you know what? I think we could be getting a follow-through day. I see the index is tightening up. I think I need to be prepared. This is another great lesson. What Bill tells us all the time in the workshops is, you're either there or you're not.
That's it, man. And there's no in between. You're either there or you're not. You're either on top of it or not. You either have your watch list fresh and ready or not. Go ahead.
And you know what? You look at all the stocks. If not all follow-through days work, but you have to be ready to grab them when they do. Because look at all of these stocks. This was December 20th. This is 2011. Buffalo Wild Wings, InventSense, Michael Kors, Apple, Rackspace,
Yeah,
Mercado Libre. I mean,
they start going one after another. That's the window. And yeah, I clearly remember, and I see the ones I was buying. And if you get in there early, there's a couple important points here. Number one, usually your ultra elite stocks, the very, very few, are the first ones out of there because they're the most powerful and they're not waiting for anyone. Point one. Point two, now notice how a little bit further along you've got Apple up there and then Priceline. Now those two really, and the SWI, they did very well. So suppose you bought, say, Alexion and the Wild Wings and Celgene, and you were showing a nice little profit, and so now your confidence that your decisions are on the right track, the odds are you're going to buy a higher percentage in Apple, Priceline, SWI, because you've got a little cushion. Your confidence is telling you. Look at Rax is in there too. So these great winners, they took off a few weeks later. You got your cushion, and now if you bought at least one or two of those four, after you've already got a couple at the beginning, think about what that would be like.
And this is why you really can't afford to miss the follow-through days. This is how we make our money. The market will offer, usually a couple of periods, unless we're in a bear market, it will offer a couple times during the year when you need to be there. You have to be there during the follow-through day. And the book, I tell you, in interviewing these people, if you want to know what helps with success, they don't fall asleep. They stay in tune with what the market is doing. They, no matter how bad this choppy period was in here, they kept paying attention to the market, and they get rewarded because they're ready with their watch list stocks. They're ready to go. They're paying attention to the bases. They're running their MarketSmith screens. They're reading IBD. They're following their routine. And, that was the key to many people's success in the book.
Yeah, go back to this choppy period in the box. During that time when you're trying and it's not working, and so you back away, I may scale my routine back some, but when you get to the right and all the conditions are favorable and you're getting feedback that you're on the right track, your routine expands. So, but the key is you don't just close the book and not look at anything for a month or two, because then you get caught flat-footed, and that never works. So you were going to tell us a great story.
All right, so this is what Randall Morrow was doing. So take a look at what the NASDAQ was doing over here. We have the NASDAQ. Remember, we're pulling back. Things are choppy. It's ugly. It's not a time to be buying stocks. But look at what he was doing. He was running a MarketSmith screen for stocks that were hitting new highs. He was also reading about stocks that were featured in IBD. When you see a stock that is bucking the trend of the overall market, the way Randall Morrow was with Whole Foods Market, he knew that that was a stock that might do well if we have a follow-through day. So did he buy it? No, because if he bought it, he would have been caught with a pullback in the regular market. So we don't buy when the market is not in favor. But he waited until it formed the couple. First of all, we had the follow-through day. The stock wasn't quite ready yet, close to it, forming a cup with handle base. And I think if we show the next slide, we can see he buys it on a cup with handle breakout. He gets a 30% gain. Now, this was maybe not a barn burner, but he is a professional money manager. He needed, probably a more stable stock in his portfolio. And hey, when was the last time you said goodbye to a 30% gain, Scott? Was that?
Yeah, exactly. They're harder to come by now. And also, I've owned Whole Foods a couple of times as a counterbalance to some more aggressive stocks, and we've talked about that in the past. So, and we have a few near us too. And I've walked in, and they run a pretty good operation. Yes, it's a slower stock. Okay, we could go on with stories. Where can we find the book?
You can buy the book at Amazon.com and Barnes & Noble, very reasonably priced.